The next topic is quarterly estimated tax payments here, right? This is the big one, right? Okay, this is the big one. And just a little background, what are quarterly estimated tax payments? And when are you required to start submitting quarterly estimated tax payments, okay? Because not everyone is required to submit quarterly estimated tax payments, okay? So by law, the IRS states that if you are estimated to owe more than $1,000 in taxes by year end for your 1099 income, not your W-2, okay? Just for your 1099 income, then you're required to start submitting quarterly estimated tax payments. And there are 4 due dates for quarterly estimated tax payments. Those are April 15th, June 15th, September 15th, and January 15th of the following year, okay? And the payment method, there's several ways you can do it. You can mail it in, you could pay over the phone, okay? Or you can pay it online. Pay it online, okay? It's just a lot easier. It's a lot more secure. Just pay it online. The IRS has a link on their site to submit quarterly estimated tax payments. The state of Illinois, you can pay it online as well. So pay it online is the most secure. So going back to quarterly estimated tax payments, what do you pay? How do you calculate it, right? That's the $1 million question. There's 2 methods here, okay? And the 2 methods that I'm gonna give to you guys is to avoid penalties, okay? Because what happens is if you underpay during a given year and you owe taxes when you report or you file your 1040 the next year, there's gonna be interest and penalties for underpayment, okay? So how do you avoid underpayment? Because I always stress avoiding penalties and interest by underpaying versus overpaying the government, giving them an interest-free loan. So why pay them more money and get a refund, right? A refund is not a good thing. Everyone thinks that a refund is something that a CPA or TurboTax conjures up for you. It is not that, right? It's not magic. It's basically you overpaid in taxes, right? But I would rather have each and every one of you have that money during the year rather than you just getting a lump sum at the end of the year, right? It's called the safe harbor rule, okay? And what that is you pay 100% of your prior year taxes that were due. Okay, what does that mean? You're gonna need your prior year tax return, okay? So your 1040, you look on page 2, line 63, okay? Line 63 on page 2 of your 1040 will show you total tax due for that year, okay? You take that number, you divide it by 4, okay? You pay that number in those 4 quarterly due dates by those 4 due dates that I mentioned, April, June, September, and January 15th. Pay those in 4 equal installments. And even if you, at the end of the year, let's say you had a better year than the prior year, even though you technically underpaid, you won't be charged interest and penalties because you paid 100% of your prior year taxes. But one thing I do want to tell you is that I'm a big advocate of paying real-time taxes, right? So that at the end of the year, no one likes to see tax due amount, right? You want to be you want it to come out to as close to 0 as possible, right? That would be the ideal situation. So what I say is, tracking and gauging basically how comparing last year and the current year on how you're doing in terms of income and jobs and things like that. Bump up your quarterly estimated payment if you know you had a better quarter than the prior, if you compare the 2, right? If you know you had a better quarter, submit a little bit extra with that quarterly estimated payment, that minimum quarterly estimated payment that we just calculated, right? Bump it up a little bit for federal, bump it up for state a little bit.